less than a decade ago was around 10-12% in India. You compare that to US or China, that's probably somewhere like 3-4%, or
Yeah.
any developed market. So there's like a huge GDP cost saving, like a low hanging fruit.
I'm here in Delhi today and together with Mohit Chawla from Bimtek Group. Thank you so much for your time.
Hello, thanks for having me. It's always a pleasure to come to GRI events. I'm glad we could do this. Please.
No, that's great. Before I ask you any question, we do have an international audience. We're reaching now almost 400,000 people.
Yeah.
And then a lot's being said about India. And before we deep dive into that, I would like you to share a bit about yourself and your organization and the vision of your company.
Sure, happy to. So I am second generation on real estate side. We are one of the developers in Delhi NCR. We do a bit of residential, some commercial. I've come back and set up the family office, so to speak, platform around 2019-20. It's been 6-7 years. We do a bit of real estate, like I mentioned. We invest across capital markets, listed, unlisted equities, some in startups. We've been spending a lot of time on alternative real estate, so to speak. For example, we're super bullish on warehousing data centers in India.
Okay.
We've set up our first asset in Delhi NCR, 1 million square feet logistics park, grade A. We have a pipeline across tier 1 cities, Mumbai metropolitan region, some in Bangalore. So that's on the logistics side, and then we're actively pursuing student accommodation as well. So that's the umbrella level.
That's the umbrella lab. That's very interesting. If you were to tell to our international players, what are today, in your view, of course,
Yeah.
what are the main challenges and also, of course, also the main opportunities that you see in India market at the moment?
Yeah. No, I think stating the blindly obvious. I was just speaking with somebody offline as well that most institutional investors, when they come to India, they're not just underwriting for the allocation that they want to in India, but obviously from a risk factor perspective in their IC memos, it's majorly like regulation, land and titles clarity, like on the diligence side in real estate, and then more on exit clarity. I think there's been a lot of progress now with the stability with the government over the past decade and a half, with reforms coming through, especially in real estate, RERA, and then I think what that regulatory backdrop, a stable regulatory backdrop, has done is given a bit of investor comfort to institutional investors, whether they are sovereign wealth funds, the GICs, Mubadlas, and the ADIAs of the world or CPPIBs of the world, and they've seen a bit of track record with some of the people, the early entrants, the Blackstones and the Proofreads of the world, who've come in, who've seen the office market develop in India, the Gurgaons and the Mumbai metropolitan Powais and the Punes and the Noidas of the world, the GCC specific bases, so to speak. So they've seen a lot of that happen in office. So what that has done is Fund 1s and Fund 2s have seen monies being returned to LPs and being deployed in larger Fund 3s and Fund 4s. So I think a confluence of factors, both at the top-down level, when I say regulation, clarity, in terms of the macro stability, and then obviously bottom up when you see the end consumer demand in India, the fundamental GDP growth at an inflection point, from what $2,500, $3,000 to $5,000, $6,000, the curve. So what that has done is that has created a huge demand, or a headspace for end consumer in terms of residential housing, in terms of spending, in terms of development of infrastructure. So all of these things, what they've done is they created a confluence of factor, or a tailwind, so to speak, on an aggregate basis, which gives a bit more comfort to institutional investors to come in. So now it's not a question of whether India. I mean, India has been one of the high growth markets. Has always been for as long as you and I can remember. But now it's more about how much should we be allocating at the boardroom level. The discussions have shaped to how much, in terms of percentage allocation should LP will be looking at. So I think
Yeah.
that's the level of maturity that we are seeing in India.
Do you think there's any clear step that India must take in
Yeah.
order for institutional international investors to increase their share of investments in India?
I think one major thing that India should be doing and the Indian government has been doing proactively is the growth of infrastructure.
Okay.
You saw, for example, I mean, I don't want to go back to the 19th century US where you saw industrialization, and then obviously now you have a 2.0 sort of, so to speak, where Americans are asking for that.
Yeah.
But then obviously I think you saw that play out, like, in China in the 80s, late 90s, where, because infrastructure, to my mind, and stating the obvious, is the backbone of any nation's economy, right? So I think whether you see it in Delhi NCR or in Mumbai, or like, the development of highways, national highways, or the airports, or the, like, the seaports and everything, all of these things, even the supply chain logistics ecosystem, be it hard warehousing or data centers, all of these things, what they've done is they've created a bit of like, fluid market, whereas from Delhi to Mumbai, or like, the Bharatmala project, so to speak, for example, a truck, when you're transferring goods from India, like, from Delhi to Mumbai, it would take 2 days, 3 days, to now where you're probably at less than a day, and soon enough it should be 12, 14 hours.
Yep.
So I think some of these very basic things, infrastructure growth, is something which is very, very obvious, because it catalyzes the whole process. And then obviously we spoke about like, the GDP per capita, the and like, the mindset of Indian diaspora is shifting from just a classic saving to consumption led,
Yeah.
where the middle income is like, the middle income group is more keen on spending on themselves, living their life, probably getting a better home. Obviously COVID catalyzed the whole process. So I think those are small little tidbits that have added up and created an ecosystem where you have a good level of ground level growth, or demand, so to
Yeah.
speak. And then these big ticket things happening, be it by the government, or the tripod of domestic or foreign, or like, the government spending the, like, the three legs of the capital
Yeah.
spending. So I think all of these things have created an ecosystem where it's given a bit more of a comfort to an LP sitting in the Canadas or the Americas of the world, who want to then deploy more capital in India from their global funds, and not just from their opportunistic funds, so
Yeah.
to speak, like a core plus per se.
That's great. A lot's been said about the end consumer today in the sessions that we've been hosting.
Yeah.
And then one thing that I was speaking to the other member that we have was that the Indian end consumer is not only driving demand given the volume, of course, but also they know what they want. They have evolved, right? And that's been driving the whole chain in the real estate here and opportunities and so on. Great. You mentioned to me that you are also into, I mean, you're second generation coming from a real estate development company, but also you mentioned some alternative investments, and you mentioned about student housing as well. Can you tell us a bit more about this? Why is it that you decided, was it you as a second generation say, hey, we need to expand our portfolio here and try new things? Tell us more about this.
No, so I think it's a bit of both.
Okay. Yeah.
So I think when I came back to India to set up the proper, like, proper family office structure, which is very nascent in India. I mean, family offices as a concept in India, or broader Asia, is a bit, like, a bit in its maturity curve versus what you see in the US or in the Western world. So I think when we came back and we went back to the drawing board, and we let's say we mapped out our long range strategic plan, where we want to be in terms of capital allocation in real estate, in broader infrastructure, or in other capital markets domain. I think we identified 2 or 3 major mega trends in India, wherein we realized that these are some of the like, tailwinds that we want to have in our back, like have the odds in our favor, so to
Yes.
speak. I think we briefly spoke about infrastructure, like what the Indian government is doing, what domestic and foreign institutional investors are doing, and creating that ecosystem, and obviously consumer end level consumer demand. So that is creating like a snowball sort of an effect. So I think that's what has led us to look at infrastructure, so to speak. Like for example, if you look at, let's just say, logistics, what we've been spending time on. I mean, India is a very low hanging fruit in logistics, in the sense that logistics cost as a percentage of GDP, if I'm not mistaken, less than a decade ago was around 10-12% in India. You compare that to US or China, that's probably somewhere like 3-4%, or any developed market. So there's like a huge GDP cost saving, like a low hanging fruit there. You've seen billions of dollars being deployed both by family offices and real estate developers and institutional investors, the Bluefields and the Blackstones of the world. And you've seen that gap converge to somewhere like 7-8% now in past, which is significant, knowing the scale of the economy. Still, you still have 300-400 basis points of like catch up, so to speak. Like which is a simple GDP savings thing. I think that's the high level like tailwind that you have. And then obviously with supply chain, with end consumer demand, with data centers, and the GDPR, the data protection rules and regulations coming through across regions, and then people more looking inwards, everything what is happening around us, like stating the obvious. So I think those things have led to logistics be in a very sweet spot. So that's that.
Interesting.
Obviously, you asked about student accommodation as well. I think India has a very high, around, don't hold me for it, probably 40 million sort of in terms of higher education, the market size. And then it's very sporadic, spread across. Like so you're seeing some of these things happen where, just like in real estate, you're seeing like consolidation in developers ever since RERA came through, right? Because what that has done is trust has now become a differentiating factor, a USP, so to speak. People want to buy from trusted developers and not get into those situations where they burn hand, or like people have seen burning hands. So I think something such as that is also in student accommodation per se, because in India it's very like spread out in the sense that it's very it's not structured per se. So there is formalization of that segment happening, because we're at a point where certain micro markets or catchment areas in different metro cities are coming across, wherein a significant amount of capital can be deployed. Because at the end of the day, if you are an institutional investor and the ticket size is 10, 20, 30, 50 million, that doesn't move the needle on the scale. Not just at the fund level, but leave aside at the global portfolio level. So you want to be in those situations where you can test the waters with 30, 50, 100 million sort of like capital, and then build multi-billion dollar portfolios. So I think some of the catchment areas in India, be it in Delhi NCR, in Noida, or in Mumbai, or some in Pune, some of these tier 1 adjacent areas where you have university cities, where you have a huge penetration of education cities, or where you have higher education, or even like K-12s, their purpose-built student accommodation is coming up. So I think we saw a bit of a delay in flexi office or flexi living versus what happened in the Western world. You've seen the student roofs and the liberty livings of the world in Europe, or even in US. Like so, I think in India we're probably getting there now, and are at an inflection point where you'll see a significant amount of calories and capital being deployed.
That's great.
Yeah.
We've been speaking a lot about India as the center of potential investments and opportunities and so on. Are there any other specific regions where you have on a list as well, or you would consider for future investments as well?
I think besides the core developed markets, besides like I think Middle East is a place which excites us. One, because of a sort of a natural integration in terms of the demographics, in terms of the people, like not just not just culturally, but in terms of the ecosystem. Like it's very, I'm not saying it's not as cosmopolitan as a London, but it's something similar to what you would see in a Mumbai or in a Delhi.
Yeah.
It is cosmopolitan,
Yep.
but then you have like that local flavor to it. And then I think what some of the Middle Eastern governments and or the had done is they've created a very favorable environment in terms of ease of doing business or ease of capital deployment. And obviously, I mean, the regulation helps, the taxation obviously helps.
Yep.
Those are the blindly obvious things. But then I think there are a lot of things that the Middle Eastern governments have done right, especially in UAE, which excite us and which we keep our eyes and ears open to, so that when the right opportunities present, something like what happened basis the geopolitical things in the past 12, 18, 24 months, where you saw a bit of so if there is to put it in simple terms, if there is a price value mismatch in some of these markets that we feel are attractive and make sense long term from a capital deployment perspective, we look at them. And so yeah, that's the thought process behind
I'm
it.
glad to hear that as I'm based. That's great. Mohit, before we go, I would like to give you the space if you have any final message to share.
Yeah.
But other than that, thank you so much for the insights.
No, it's been a pleasure. It's been a pleasure. I mean, we've covered India. I don't want to hard sell.
Yeah.
And obviously, I think you have a very international audience. So I'm sure, I'm hoping rather that they take something 2 cents out of it. So yeah, that's
No, it's
really
always great.
I'm so glad we could do this.
That's perfect.
Thanks,
Thank you so
Mark.
much.